Hello everyone, myself Keith Barvaya. Good morning, good afternoon, good evening. How are you all? Hope so you all are fine. So today I'm going to discuss the concept of taxation of business trust, which is basically a topic of CA final direct tax for assessment in 2020-2021. Before moving further, please help yourself. The notes of business trust is already provided in the description column below. Now, what is meant by business trust? It means a trust registered as an infrastructure investment trust or real estate investment trust registered under SEBI Act 1992. Now, these trusts are like mutual funds that raise resources from many investors to be directly invested in real estate or infrastructure projects. Now, the trust would raise capital by way of issue of units or can also raise debt directly from resident as well as non-resident investors, and after which such trust would acquire controlling or other specific interest in an Indian SPV. Now, moving forward to taxation part. Any capital asset like say listed security, units of UTI, equity oriented mutual fund, or zero coupon bond, if it is held for less than 1 year, then it is treated as a short term capital asset and it is taxable at the rate 50% as a short term capital gain under section 111A. Any other asset like unlisted shares, immovable property, if it is held for more than 2 years, or any other capital asset, if it is held for more than 3 years, then it is treated as a long-term capital asset and it is taxed at the rate 20% as a long-term capital gain under section 112. Moving further, all other income are taxable at the rate MMR. It means 30% tax, 37% surcharge plus 4% health and education cess. In aggregate, it comes to 42.744%. Now you might be having a question that which income are taxable at the rate MMR? For example, STCG on the sale of immovable property, interest on the investment other than SPV, because interest from SPV is already exempt to business trust under section 1023 FC. Now moving further, when a business trust is holding 100% in a SPV, then any dividend declared by such SPV is exempt under section 1034 to both the business trust and unit holders, and in such case no DDT is to be paid by SPV under section 1150. In other scenario, if a business trust is holding 50% or more in a SPV, then means it is a normal case, then any dividend declared by such SPV would be exempt under section 1034 up to 10 lakhs to such business trust. It means above 10 lakhs it would be taxed at the rate 10% subject to 115 PBTA. Please note that it is totally exempt to unit holders, and in such case DDT under section 1150 is also to be paid by such SPV. Please be noted that all their income is exempt to unit holders under section 1023 FD. It has an exception. For example, interest from SPV under section 1023 FC, it is wholly taxable to unit holders, but it is exempt to business trust. It is taxable at the rate 5% to non-resident or foreign company unit holders and normal tax rate to other unit holders. It means others means individual, OUP, BOI, partnership firm, and normal tax rate means if in case of individual, UOP or BOI, it would be taxable at the rate slab rate, and in case of partnership firm, it would be taxable at the rate 30%. In such case, TDS under section 194 LBA is also to be deducted at the rate 5% if a unit holder is a non-resident or a foreign company, and 10% in case of others as explained here above. Second case is a real estate owned rental income. It means real estate investment trust owns and manages commercial real estate properties and lets out to other person. In such case, any rental income is exempt to exempt to business trust under section 1023 FCA, and it is taxable to unit holders. In such case, normal tax rate is levied at to non-resident foreign companies and others. In such case, TDS under Section 194 LPA is also to be deducted at the written force under Section 195 to such non-resident or foreign company and 10% in case of others. Moving further, when any unit holder transfers any unit of business trust to any other person, then it would be treated as a long-term capital asset if it is held for more than 36 months, and it would be taxable at the rate LTCG under Section 112A in excess of 1 lakh at the rate 10%. And if it is held for less than 36 months, then it would be treated as a short-term capital asset and taxable under Section 111A at the rate 15%. Moving further, when any person transfers its shares of SPV to business trust in exchange of units of business trust, then it is not considered as a transfer and no capital gain is levied under Section 47. It means when any person is transferring its shares of SPV, it means here 50% or more holding is of business trust in SPV. It means 49% or less is held by other person. So such other person transfers the shares of SPV to such business trust, then against the unit of business trust, then it is not considered as a transfer and no capital gain is levied. But and here the concept of MET applies under Section 115GB. It means any notional gain or loss on exchange of capital asset being shares of SPV against the unit of business trust, or a notional gain or loss resulting from any change in the carrying amount of seed units or transfer of units is to be adjusted while calculating MET under Section 115GB, which means any notional loss, if it is already debited to P&L, then it is to be added back. And any notional gain, if it is already credited to P&L, then it is to be reduced from the P&L account while computing book profit under Section 115GB. Further, now if a unit of a business trust is finally transferred to such other person, then such other person is known as a unit holder, right? Now, if such units are transferred by such unit holder, then it would be liable for chargeability of MET under Section 115GB. It means if there is a gain, then it would be credited to P&L account, and if there is a loss, then it would be debited to P&L account. Moving further, in such case, cost of acquisition is considered to be a cost of acquisition in the SPV. It means such other person at the cost of which it is acquiring the shares of SPV, and period of holding is to be considered as a period of shares in SPV and period of units in business trust. It means past and present both are considered while calculating period of holding. Moving further, business trust is compulsorily required to file ITR under Section 139(4)(e). Moving further, Section 1150, no DDT is to be paid only when 100% equity shares is held by business trust in SPV, except held by government body, government, any other person required to hold any shares under any law or direction of government. For example, if any business trust is holding 94% in SPV and government is holding 6% in such SPV, then it would be deemed that 100% equity shares is held by business trust in such SPV, and in such case, no DDT would be required to be paid. In second case, dividend should be paid only out of current profit. It means current profit means any profit earned after the date of acquisition of 100% holding by business trust in such SPV. It means when such business trust is holding 100% of its equity shares in such SPV, after the date of such, the current profit earned any would be, if paid dividend out of such current profit, then it would be, and in such case no DDT would be required to be paid. Last point, it is a common point for a business trust, investment fund and a securitization trust. Breakup regarding nature and proportion of its income and other details. It means breakup regarding nature and proportion of its income and other details is to be prepared, and it is to be submitted to unit holders or investor up to 30th June of the following previous year, and it is to be prepared and submitted to income tax authority like CIT, PCIT up to 30th November of the following previous year. For example, if in the say previous year 1920, the breakup regarding the nature and proportion would be submitted to unit holders or investor up to 30th June 2020, and it would be submitted to income tax authority up to 30th November 2020 of the following previous year. Okay, so here I am concluding my topic. Hope you find this video useful. In case of query or suggestion, please do comment in the comment section below. Please like and share the video with your friends. Also, please do subscribe to my channel for more of such useful videos, and also don't forget to click the bell icon to stay tuned and connected with us. Thank you.